Hi guys, how y'all doing? This is Daryl with Lee's Lawn Care Services. How you guys doing? Welcome to the new year. Hope you guys had a great season last year, and I hope you guys looking forward to having a great season this year. I know I am. I gotta talk about the elephant in the room, man. The dreaded taxes. Ugh. So I know a lot of people are not as fortunate, as we are. We were very fortunate this year we did our taxes together with the business tax and her tax, and we actually came out ahead a little bit because I had some good deductions. I bought that machine, and I had bought another push mower, and with the equipment and all, and the mileage and all, we came out pretty good. Sorry about that. Came out pretty good. And we used TurboTax software. That's what we used. We had one of the premium versions of it that we used that detailed everything as we went along. So that was pretty cool. Pretty cool, man. Definitely will use it again, because it simplified everything for us. And I don't know if you guys jumped on that or tackled that yet, but that's something that we all got to do. We got to face it. And I was kind of leery about it in the beginning, but then after getting it done, definitely changed my outlook on it. But what it does do, it just sheds light on what you need to do going forward. There are some things that we can do to make things a lot better going forward, versus kind of winging it, that type of thing. You definitely want to tap into some stuff that you'll have access to that you didn't think you could have access to. So, like I said, we came out okay. The key thing that I learned about it was having a big purchase, and also going along with the mileage and all, it helped out a lot because I do a lot of traveling, to my accounts and all. So that helped me out a lot. That was a nice hit. And some of the other things, you have to pick a side when you're doing it. You can take the maintenance piece of it, if it's more, or you can take the mileage piece of it. For me, the mileage piece of it was a no-brainer. They recommended I take that because it was higher than the maintenance piece. The maintenance piece was, it was a good amount, but it wasn't a high enough amount. It was good, but it wasn't high enough, so I had to take the other side. But it's just something to keep in mind, man. Which is pretty cool. At least you're getting some relief, on some of the things that you buy and all. So also, what I figured out as well, like my wife have a retirement account, so she gets, she got credit for, depositing money into that retirement account because that was, it wasn't considered income. So she has those things going, and I got to start one. I had one a long time ago, but then I cashed it out because I had left the job. So when I left the job, I cashed out the retirement and all. And I said I was going to start one back up, but I never did. But I'm going to. I'm going to start another one back up. So that way, that's another tax break. So there's things to think about. Like I said, what it did for me, I don't know about you guys, but what it did for me was open my eyes to a lot of things, to where I could see the the benefits of a lot of stuff that you know, that you don't have to come out of your pocket paying so much for taxes if you do certain things. You know, you could do donations to certain charities and all that would offset some stuff. But the main thing that I got out of it, now I see why people buy new mowers every year and buy, you know, different things every year. I could have bought a new truck, you know, as high as these vehicles are right now because of inflation, and I could have offset a whole lot more if I did that, but I didn't do that because, I mean, my old truck's still running. It's still running fairly decent, so I didn't want to put myself in that type of debt, you know, this season. But I didn't take, they could have stretched it out over 7 years, and I didn't take that option because my truck's at 12. I mean, I don't know how much more I got, you know, going. I know I'm gonna have to get another vehicle at some point. You know, it's getting pretty close. So I didn't take the 7 years. Now, when I buy the new truck, I will take the 7-year depreciation over 7 years, so I can continue to use that deduction and get that percentage. So I'll do that. But I didn't do that. And as far as the machine, you know, I'm just giving you guys some insight. That's all. So, you know, something to think about when you're fooling with it. As far as the machines go, I didn't take the 7 years for the machine either. I took the full value of it up front, even though it's, you know, it's not a year old yet. I took the full value of it up front because I gotta buy another. I'm buying a bigger machine to go with that one to help me get through some of the other accounts. You know, the bigger properties that I got. So, and with that being said, when I buy the bigger machine, then I can use that deduction for next season, and, you know, go from there. But that's what I discussed. That's why people swap out stuff. That's why people swap out stuff so quickly, like 2-3 years. They swap out, they get something else, and I see the reason for that now. Now it's definitely tax benefits to that. So that I didn't know. You know, that I just, you know, I'm still learning. You know, when it comes to this, like, for me, I've been doing this business for years, but I legitimized the business last year. Okay, with the LLC and all. And what it was, I used to work, so I didn't worry about any of that. But I could have did it then, but, you know, I didn't do it because I didn't truly know what to expect, put it that way. But now, knowing what I know, I would have been done it, you know. But hey, you know, better late than never. So, like I said, it worked out for us because we're gonna come out really, really good. Thank the Lord. You know, God is good all the time. And I'm just sharing some tidbits with you guys, you know, that a lot of people don't share, you know, when it comes to the business that we do with the lawn and landscaping. So, like I said, you know, a big purchase a year, unfortunately, going with the, for me, was the mileage. You know, I could have went the other side, but I wasn't going to get as much credit on the other side. But this side, I got really good credit, you know, from that, you know. So, which is like I said, pretty cool because they make you put both in, and then it'll tell you which one to take, you know. And hey, I'm happy with that, man. I'm very happy with it, you know. So, unfortunately, like I said, that's the drawback of it. You know, when you make a certain dollar amount, you gotta do something. I mean, not overwhelming, but you got to do something to offset it. Now, what you can do as well, you can put money on the side, a predetermined amount for your tax, like the software I got, I can put a number in there, and it'll take out a certain amount every loan I do. It'll give me an estimate of what I need to take out for tax. So I can do that. I just put the percentages in, and it'll tell you what you need to take out for tax when you're doing these yards. So that's just my stuff. That's just something to consider. So that way, when tax time do come up, and you don't make those big purchases to offset what's going on, then you have that money put on the side for the tax. You can do that. I may do that. It's just a lot of stuff that you constantly. When you get to the point when you're not learning anything anymore, then it's probably time for you to check out. I hate to say it that way, but I learn every day, man. Every day you learn something. It's something new. It's something different. It's something to tackle. And a lot of people don't talk about what I'm talking about. And a lot of people, when they talk about it, they don't tell you some of the things that they do to offset some of the stuff that goes on. So I'm talking about it because I want you guys to not be misinformed about the stuff that happens when you do that. Because I'm talking about the elephant in the room. The tax. That's what we have to deal with. Some people have to pay a lot of amount. Some people have to pay a small amount. Like I say, I would recommend. You could either talk to a professional, which you're gonna pay through the nose, or you can buy a premium software, not a cheap one, a premium one. And like I said, the one I have, it tells you line by line what that line means and what it's going to cover, and it tells you also when you start putting stuff in if it should go on that line or should go on another line or in another area, and it'll save it for you and put it in the other area that it needs to be in for you to get the maximum amount of a deduction. So that is something you guys need to really, really look at. You can have a software that's self-explanatory that can do that for you, versus you paying these experts a lot of money they can tell you the same thing. If you buy a premium software, it's going to tell you the same thing, as to what you need to do. That way you don't need to listen to a voice, that could mislead you sometime. They might not interpret it the way it's supposed to be interpreted. So that's just my opinion. So I wasn't going to pay. Like last time I paid a tax professional, I got burned. I paid a good amount, and I could have avoided that. So this time we got a premium software, like really good, and it, like I said, it's foolproof. When it tells you when you get to the line and you put something in, it's like, okay, this is better suited for this area, or that is better suited for that area, and then it'll recommend different things to save you. So that's just my take on it. That's what we did. We got the combo of she had 1040, a 1040 form that she had for work, and then my business, I put that in, and that's what it was, like a deluxe edition. So it broke down everything, like simplified everything, and we submitted it, and we good to go, and it even tells you, it also gives you levels of if you do a lot of stuff, it'll tell you, if you at risk of being audited or not. That's how good the software is. It rates the ability for them to possibly audit you if you do, certain things. It tells you the risk. You know, and that's awesome. You know, to me, that's worth it by itself to me. You know, if you and it, you know, it tells you when you're on the right track of doing stuff. So, like I said, you can go to a tax professional and pay pretty good money, or you can buy premium software and have it done that can actually tell you, like I said, where things go, where things need to be. So, like I say, guys, I just addressed the elephant in the room. Me, you know, some stuff is personal that I keep to myself, but if I can give you guys some information to help you do better about stuff, I'm gonna tell you, you know. And it was a benefit for us filing jointly like that, because if I'd have filed individually and separately, it might not end it well, you know. So that's why we filed joint, and we were able to get all the benefits and all the credits. You know, if you can, you know, with your significant other, I suggested file jointly, because they're going to give you more. It's going to give you more flexibility, and it's going to give you more benefits filing jointly versus filing separately. That's just my take on it. And when you start putting the deductions in for the stuff that you have, it's going to start bringing that refund number up and bringing the other number down. So that's how that is, you know. But yeah, that was the key to me, guys. Big purchase and mileage. That was the two big ones for me. And then, you know, all the other stuff, the equipment, the machines, the trailer, all that stuff you put in, and you can just go from there. All right, guys, I love you. I'll catch you on the next one. I did go on vacation. I'm probably going to upload some of those videos from that cruise that we just took, because we just got back. And we'll go from, I'm still tired. It was a 10-hour drive. So I'll see you on the next one, guys. Peace out. Love you. Bye.